Well, let's talk about the mid-cap strategy coming in for Jefferies. When we talk about the Jefferies strategy, we always tend to believe that Mahesh Nandurkar, who is of course the equity strategist there, will be writing in, but this time around it's coming in from the mid-cap strategist that they have, Sonali, and she's writing by saying that since June 2020, you've seen a notable jump as far as the mid and the small cap space is concerned. They are calling it the SMID, or the small and the mid-cap space, as you know, they generally call in the market, and they believe that that is something which has done well, that they believe will continue to do well, and that will be led by the earnings upgrade that they believe. However, it's not that everything over there is looking good. We'll talk about more stock specific action that they are talking in this particular report. They say that the Nifty mid-cap price to earnings multiple is now at 24 times. This is outpacing the Nifty, which is currently trading at about 22 times. And in terms of price to book value, it is still on the cheaper side versus the Nifty. So Nifty is trading at about 3.1 time price to book. The mid-cap index is trading at 2.7 times. So that is where the room of expansion actually still lies, is what they are saying. Now, what they are believing is that they recommend a bottom-up approach as far as the mid-cap space goes. They would like to approach it considering that FY22 will see a 50% jump because, of course, of the low base, and FY23 will follow it up with a 23% sort of a base. It will also, see a ROE uptick, which can happen as the efficiency tends to improve, leverage tends to come down for various companies, and operating leverage tends to play in as sales growth goes up. So they expect an ROE uptick of about 500 basis points over FY21 to FY23. Now, how would they like to play it? Now, they have divided it into various sectors. So in the industrial pack, they particularly like Crompton, Blue Star, this is Crompton Greaves Consumer, Blue Star, as well as KEI Industry. Remember, some of these names have been great compounders. Some of these names have done well, but they believe that these are names that will continue to do well. So they form a part of their small mid-cap strategy list. The building material space is also what they particularly like. So there they like Kajaria Ceramics. That is one of their top picks as far as the building material space is concerned. They are also incidentally bullish on real estate, and maybe that's why, a couple of names as far as their building material names is concerned also do play a part of this list. In terms of property, they like Shobha Developers, they like Oberoi Realty. This is also a part of their large cap pick, if I'm not wrong. But they have been bullish on the property space, and they continue to be so. They would advise their clients by Oberoi Realties as well as Shobha Developers. And in pharma, they like Max Healthcare, which of course recently completed a fundraising, as well as is a recent listing on the exchanges due to the amalgamation that you have seen, as well as Ipca Labs. Again, this is a name which is not done something for a while now, but they have it on their top pick list. So they believe that the mid-cap space would do well. It would be led by earnings growth in FY22 and 23. This will also lead to an ROE expansion, and they would like to play it via industrials, building materials, property, as well as pharma, which come in among their top pick list as far as this sector is concerned.